Good weekend, all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Monday, January 20th, 2013, 5:06 p.m. Central Time. Well, as you can see, the stock market, a mixed bag. We're already after 5 p.m., remember that, so this is how you're reopening. In the grains, I'm expanding the numbers here for the grain, so you get an idea of where they're at. And obviously, when I do these a bit earlier, what you'll be able to see is the high-low close of the day. I'm also got the sugar, the cocoa, the coffee, so you can see those easier. Since this is an ag update, we'll focus more on those. Now, in the weekly chart of soybeans, it's first day of the week, and here the market is down on the week 5 3/4. More important to me is that we're running into the resistance right here. Now, if you come up to this number, it was the 943 zone. So 943 is that number. I don't know how much you read into this. On Wednesday, we're going to get the signing of the U.S.-Chinese trade deal. None of us know what's in it. And I can't begin to tell you how much. Soybeans, corn, DGE, that white lightning, wheat, I don't know what they're buying. So until you know what they're buying, and if that report even gives a dollar amount, we'll find out. The report, they may just release that it's a $40 to $50 billion deal. It includes X amount of agriculture, and leave it at that. And then it's up to us to find out what's going on. What I can tell you is at this time a year ago, as they were looking at Brazil, there were about 20 cargoes there loading soybeans. There's 10 right now. Our research department was writing about that today. That could be that while China's going to keep that avenue open, they're going to cut back what they've been buying there and increase the purchases out of America. Your guess is as good as anyone else's, but that's always interesting information to have on hand. When we take a look at today's daily bar chart action, down 3 3/4, and you look at how the action was on Friday, where you're up 2.5. Remember, we had the USDA supply demand report on Friday. So what the market has done is it hasn't yet gone through the lows of Friday, the lows of the day of that report. It's held on to it, but we'll see if the market can do anything right here. So far, the chart pattern is one of a lower low and a higher high. That is no trend at all. The market is fighting and has been fighting. At the 18-day moving average of closes, the red line, I call that the line in the sand. With the close today, the bias is down, no trend. The swing line, the lower Bollinger Band, where I'd look for potential first support to show up, is at 934 with resistance at 955, the upper band. And when I look at the slow stochastic, my brain was faster than my mouth, I'm looking at still momentum pointing to the downside. So this is just a churning picture going on. Now, what I saw today was the feature of the day where traders were buying meal, selling oil, unwinding their long oil, short meal. So what you have here is the negation of a downtrend. In fact, you had that on Friday. When the market got up to 303.80, you broke the pattern of what we had, and I'll take this away, lower highs, lower lows. I know I had mentioned that you had gotten close enough going into that report with the low, in futures of 299.20 and a Bollinger Band of 292.10, and an oversold market where I thought the pros might say, okay, how much do you want to go through tomorrow? Being Friday, the market rallied back up, negated the downtrend, followed slightly to the upside, but the pattern is one of a higher high and a lower low. Still no trend as I want to view the market. When you take a look at soy oil, it failed. And, there was a sign here that it was going to fail, and looking back at it, you had the embedded reading, you lose the reading, and you keep it lost. See it right there? That often, I wish I could use the word always, but it's not accurate, often leads to price and the 18-day average making a run at each other. This was the action on Thursday. Friday, it made the run, closed under it, and today you're getting the Johnny-come-latelys that didn't bailing on it. What's the trend now? Down. Lower highs, lower lows. However, you are very oversold already. So how much is this going to milk it for? I don't know. You're at 33.95 on the close. Most I'm looking for is the 33.56 area on the first wave, and that's the most I'm looking for. if China comes out and says they're buying soy oil come Wednesday, the game's going to change on you like that. It's a difficult position to be in. In the corn, do you need any more proof that you're just staying in the Bollinger Bands? This is how the market looked going into, this was Thursday's close, the WASDE, supply-demand report on Friday. The market gets all the way down, follows back into, by the close, the Bollinger Band and a higher high today. This market's not trending. And I understand it. Everybody wants to get a grasp of what is China going to buy from the U.S. In the wheat market, you had a good report. The market, if you take a look, this is Thursday. If you go up, the Bollinger Band could be the resistance for the Friday report, and that's just what happened. These reports are important, some of them, some not. This was an important one leading into the U.S.-Chinese trade deal. In the sugar market, this is just a move that now you've got to look at it as a breakout from sideways action that could have legs to it. Yes, I realize it's overbought and it's 2 days over the upper Bollinger Band, but the last time you got out and over the Bollinger Band was back here, and you had a heck of a move. I think you'd agree with me. Take a look at this. You got up and over your 2 days overbought condition, and you moved out. I look for patterns like that, and when the market now is back into a tight pattern and now it's starting to move again, I'm certainly not in the bear camp when I have the higher lows, higher highs. No, you're never, and I want to use that word. That's one of them I'm going to use. I don't recall myself, since I really learned Bollinger Bands a long time ago, saying to clients, buy over a Bollinger Band or sell under it. I'm going to use the word never because I should be slapped across the face if I tell you to do that. In the coffee market, this is a running right on the Bollinger Band with an embedded reading. Told you I think the longs are caught in this market, and this is how you don't let them out. It reminds me of the palladium market when it was running this way to the upside, and people go, and when I was a young broker, it can't keep going down. It's not going to keep going down. Okay. The next support zone, if it wants to extend even further, is 111.25. The 100-day moving average of closes. In the cocoa, this market resorted to break out to the upside, and this happened last week right here. And it did it when it was in an overbought condition, which is the hardest thing in the world for a trader to want to jump into, but you had the higher lows, higher highs. It targets the potential of the upper Bollinger Band. You got there and you've stalled since your first hit of it. In the cotton market, embedded reading. You finally, take a look, you hadn't hit a Bollinger Band top since back here in December. You finally, on Friday, 71.39, got through the upper Bollinger Band. No, you just missed it. I take it back, of 71.45. Today's the day you're finally getting to that number. It's unbelievable how this market has had to work itself to get up there, but it's done it. Now, what market do I think's in the mix for China? It's cotton. Why? Cotton's an export market to begin with, so it's logical that that be a strong one for them. The meats, I want you to just watch this spinning action. Now, I've moved to the April cattle. We've got the identical pattern in the Feb. You might as well go to the April to get time if you're going to get a breakout one way or the other out of this pattern to jump on board. So I'm watching it. The bias and trend is up. Higher lows, higher highs over the 18-day average. You are overbought. If you break out to the upside, you're going to get more overbought. Now, if you start coming down through the 126.57, then it's more whipsaw in here until it resolves which way it comes out of that. In the March feeder cattle, we have an overbought market. We have a market that's hit the upper Bollinger Band on a sequence of times, unable to hold the gains. Today is no different. You got up to that number, and then you closed 160 points lower. And I moved to the April hogs, and it's just falling apart too. This market is not getting the necessary bid it was hoping for out of the U.S.-Chinese trade deal. As I said, if you move into the later summer months from here, they're up about a dime from this, but there's nothing I'm seeing that is looking bullish. This is a bearish-looking chart, admittedly oversold, but certainly not the breakout that so many traders were looking for in these particular markets. Now, when I talk about my research, I do a heck of a lot of it. And I'm proud to say tonight, for my paid subscribers, you can't try it as a trial, my paid subscribers can go to the website and see the new ETF video. I've only done half of one to give them a flavor of what's coming out this week. But for those of you, especially grain traders, I start you off with the morning subscriber video because by then I've already got what's going on in the cocoa, the coffee, the sugar market, all the grain components, and I at least know from the night before what's going on in the meats. And I bring you up to date on it. Some of you want audio commentary. I put that out as well, at least one a day. Twice a day I try to get, but one a day is very typical for me. And if you just want the commentary only, we can make that available at a reduced price. But you haven't tried this. I want to put it in your hand. Not the ETF video and the spiders yet. That's coming for you, but not yet. How do you get this? Go to www.iraepstein.com. Sign up for a free trial. We'll put you on that. You can call my staff if you have any issue with that at all, or you can click here if you're watching me on YouTube. In the meantime, I'm Ira Epstein. You have a great day, and I will see you all tomorrow.